What's up, traders? Flash Crash Gordon here. Hope you're well. It's Thursday night, 9 o'clock. I have a really important question for you about drinks. What do I mean by that? All right, let's take a look. So let's play a trading drinking game. Can you pick the one that, one, is under investigation by the Senate Majority Leader Chuck Schumer? He's recommending to the FDA that they investigate it because it's got too much caffeine in it, like 6 times the amount of caffeine as a regular Coca-Cola, and kids on YouTube are pushing it to our kids. Another one of these guys made 70% return in 3 months. Another one of these is sold by an ex-Navy SEAL, which I drink about 2 of them a day. I have it on repeat order on Amazon. And a fourth one, I'll probably drink after this video's over. It's Thursday night, 9 o'clock. Can you pick which one? And I'm not going to tell you what the name is. If you've been reading anything in the news, you probably know which one it is. But we got to play the game a little bit here. And then we'll take you through a trade that we currently have on. I want to take you through sort of the chronology of the trade and show you how we got into it, why we got into it. I'll show you the steps that we take to put a trade on. I personally hold this position in my own accounts, which I'll show you my live accounts. I hold it as a official trade recommendation for our research business trade analysis, and we also hold it in our growth portfolio in my wealth management business inside Edge Capital. So I'm kind of putting my money where my mouth is. And okay, so let's go in. I'm gonna build it up a little bit more. I'm not gonna tell you which one it is, but I'm gonna set up the trade. Okay, so what we're looking at here is we're gonna look at the sector in the industry group that contains, or the drink is within these sectors, this sector and industry group. So on the right side here, okay, is a relative rotation graph. Okay, and I hope you've seen this before. This is basically the only way to look at sector rotation, right? And what we're looking at here is XLP, consumer staples, which again, this drink is a member of the staples sector. And then specifically the industry group inside the sector is soft drinks and non-alcoholic beverages. And basically what you're seeing is this guy rotates in a clockwise fashion. As you start to move up into this quadrant, we start to get to improving. And then once you cross over that horizontal line, then you start to see relative outperformance to the benchmark, which I have this guy benchmarked against the S&P. So consumer staples really started to outperform the S&P back in May and June of 22 last year, then moved into leading at the end of 22 and then into 23. You know, the growth trade really got going. Okay, so that's what's happened in the back in the first 6 months of 23. Okay, so when we put the trade on, it was approximately here, I would say one more, it was in May of this year, okay? So that's the monthly rotation. Here's the weekly, okay? So each one of those dots represents 1 day or 1 month. Down here, each one is 1 week. So this is a smaller time frame. So the trade that we're talking about developed back here in March, April, and then I officially put it on in May, okay? Now, why did we do that? Well, as I'm moving on this percent change chart, which by the way, we're looking at XLP, consumer staples in blue, soft drinks in green, and the SPY, the S&P 500 as your benchmark, just to show you what's going on. So back here in March of 23, you're gonna notice that, watch the hook that happened in XLP in blue and soft drinks. We made a hook here at the end of March into April. And then all of a sudden, look, XLP is in blue, is leading the S&P. So actually staples right here into April are leading, right? So then we start to head up here, and then soft drinks, look, soft drinks are actually leading the staples. So staples are leading the S&P, soft drinks are leading consumer staples, right? So we're trading a strong sector, strong industry within a strong sector, okay? So the trade that I put on was right around May 5th. It was right about here, okay? Now you can see an XLP in blue, look, is clearly stronger than the SPY here, right? So this was the signal to say, hey, look, staples are doing well, soft drinks and NA beverages are within here. And of course, Monster Beverage is within this, and that's one of the best performing S&P stocks with the longest history, right? So here is the one of the main signals that you're going to use to show that the sector is outperforming the S&P benchmark, and this industry group within the sector is showing really good relative strength. Okay, so then we went to work in the stock. Okay, big shock. Here's the stock, Celsius Holdings, CELH, right? This is a $13 billion market cap company. And I'm going to show you the setup, the chronology, and again, take you through step by step why we put ourselves in this trade. So, I'm kind of bringing the heavy guns here. We do fundamental, we obviously do sector rotation and technicals. I do get into Elliott and Fib. I've been doing it for over 20 years now. Right, so this was the setup in CELH. Okay, so a nice 5-wave move up. The top was here in December 22. A nice little 3-wave correction down here to March of 23. And remember, on that last screen, that's right around March is when Staples and the soft drinks started to move higher. Okay, so here's the move. Okay, and if we think there's a good 3rd wave move going on here, there's some pretty high upside implications for where this guy could go, but that's certainly pretty long-term time frame. So I'm looking to trade just the initial move up. So I'm going to kind of play it back in time, and I'll walk you through what happened. Okay, so all right, May 5th we entered long at 103.75, and this trade alert went out for clients of trading analysis. So that should be May 5th. Right about here, and I don't mind showing you the actual trade. You might see some of the other trades that we have on here with customers of or members of TA. So CELH was right here, 103.75 on May 5th. Okay, and this was the setup chart right here. Okay, so there's the green 1, green 2. This is the actual trade we sent out, the chart we sent out to clients at the time. So trading about 103.75. Okay, so there we go. Now, earnings were Q1 earnings were 5.9, and the way this thing was setting up, that it was probably a 3rd wave, which is the strongest move. Like, okay, I'm gonna trade this one a little bit. There had been some positive analyst talk. There's been some good coverage on it, and of course, the sector and the industry group are moving up. Right, so let's kind of play it forward. So we're long at 103.75. Earnings are coming out. This day should be like May 9th. Here comes earnings, and boom, crushed it. Okay, so we traded up to 128 right after. Now, what did earnings do? Well, earnings were pretty unbelievable. Let me just take you through that very quickly here. These are going to be Q1 earnings of 23. Okay, so this is CELH. Announces financial results first quarter of 23, record first quarter revenue of 260 million, up 95% from 133 million in Q1 of 22. Right, so Celsius achieved record Q1 revenue, $260 million right here, 261 compared to 133 million in Q1 of the year before. Cost of revenue 146 million compared to 79 million, for a gross profit of 113 compared to 53. The margins went up quite significantly. Gross profit as a percent of revenue was 43.8 for this quarter, up from 40 in the prior year. Overall, gross margin improvements were driven by reduced mix of international cans, cost savings initiative, offset in part by additional inventory write-offs, et cetera, et cetera. So if you look at the move here, again, revenues 133 to 259. Their margins increased by 3%. Gross profits 113 million compared to 53 million. And then you look down at EPS, 41 cents compared to 9 cents the year before. Like, just crazy move, right? All right, so 519 was right there. Actually, we got pretty close to the high, so we took some off at 133. And then what we did is I added back on 6/1. So June 1 was right here. As soon as this correction was over, I put that piece that I booked back on at 136. Okay, then we hung in for 2 weeks on 6/14. Right about there. So 6/14, we got out at 138, booked another little piece. Okay, so I still have most of the position. And then as we go through, we went now on 7/13. Okay, this is when I put an option trade on. All right, now we had earnings coming up again. And of course, Q1 earnings were fresh in my mind. So on 7/13, we did a long call butterfly for earnings. Okay, now this is a little bit of an options play. We did a 155, 160. It's basically a call spread, buying 155, selling 160, and then selling a call spread on top of it to sort of try to get a move up to 160 while the stock was at 150. Okay, hung in there for a while, and then just yesterday we had earnings again on CELH. So let's kind of play this thing through. So there's the end of July. Here's coming to August, and then we pull back in a wave two, wondering how deep this wave two is going to be. Let's continue, and then we had earnings that just, again, kind of blew it out of the water again. So what were the earnings this time? Okay, so earnings this time, well, you remember what we did last quarter. Celsius achieved record second quarter revenue of $326 million. Last quarter, remember, was... Last quarter was, let me just pull that back up again. Last quarter was $259 million and gross profit of 113, 259 and 113. This quarter, Q2, they did $325 million on 158 gross margin. 64 million income from operations with an EPS of 53 cents this quarter. So again, they just crushed it. And also they said something very fun in here. They basically said gross profit margin improvements are attributed to lower package and raw material unit costs. So awesome. Commodity price coming down and supply chains opening up. Reduce product and waste and improve inbound, outbound freight efficiency. And they also have a deal with Pepsi for distribution. So another blowout quarter here, right? So where do we stand now in Celsius? Okay, I still have options, and I have some options that expire tomorrow. With that butterfly, those of you who know butterflies, basically, you know, I tried to get up to 160, which I thought would be about as high as it would go, which is right about here. Well, earnings came out and it just ripped. And we opened here at 160 and went right up to 172. So I had to kind of scramble on the butterfly. So basically what I did is I cut the 160 calls, and I was keeping the 155s and the 165s. So I held those for a while as the stock was trading 173, and I think I go in here and I start to close the 155s. Yep, and I'm having a pretty good day, up about $4,600 on that trade, and the initial risk on that options trade was only $200. It was a crazy return. So I still have some of those 165s calls going there. So you know, I think there's more upside room to go here in CELH, and let me just show you from the wave count where I think we may be. So again, this is current day. Okay, this is where we are as we close today. It's August 10th. You know, I'm thinking that this is another wave 3 with those kind of earnings, with the way this is going, with Prime under investigation. I think you guys know that this guy, which my kids like, which I don't let him drink anymore, is 6 times the caffeine than Coca-Cola out. This stuff I love. Jocko Go. I drink this all the time. My wife loves Celsius, so I'm gonna have to try this. It's 9 o'clock at night, so I'm not drinking that. This one, you probably guessed it. We made it through the video. So, cheers to a good trade. Oh, lime. So here's where I think Celsius could go. So if this is a good wave 3, we should at least get to 100% projection, which basically that means this percent change move in wave 1 was 95%. I mean, a minimum would be 61% of that, which is your fib ratio, which is a 51% rally from here. That's going to be at 204, and then equality would be up here at 262. So we could have a long way to go there. Right, so I am still long and strong the stock. We have it with our members. We are going to continue to ride this thing up. I'm still carrying my few little shares. I've got 30 shares left over. This is what we traded $250,000 live stock swing desk for our customers at Trading Analysis. And this active portfolio is going to be built into the the wealth management business. So the two are going to basically come together. Hopefully that helps, guys. Appreciate you hanging in there. I know that was sort of a long video, but there was a lot that went into this trade. So cheers. Appreciate you watching. See you guys on the next video update. Hi, it's Todd from TradingAnalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at TradingAnalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.